Good morning. This is Tres Knippa for NakedTrader.com on the floor of the Merc in Chicago. Today I want to talk a little bit about Japan. Last week, the Bank of Japan made a very important announcement. The Bank of Japan is essentially following now the playbook of our U.S. Federal Reserve. So what Japan has announced is, now we all know that Japan has been trying with numerous currency interventions. Japan desperately wants to devalue their currency. Why? Because they want to increase exports by their currency going down. We all know that that's part of their playbook. Now what they're announcing here is adding another batch of money to the BOJ's war chest, if you will, to buy long-term treasuries. Now, two important things to note here. Number one, as they buy treasuries, that infuses more currency into the market, serving to depress their currency. But also, let's remember what the BOJ is doing here. What the BOJ has announced is that they want to target an inflation rate of 1%. This should really bother the people in the Japanese government bond market. So right now, if you've got deflation of 2% and you've got a 10-year bond yielding 1%, well, that gives you a net real yield of 3%. Not so bad. That's one of the reasons that you've got kind of this artificial demand for those JGBs. So what happens if BOJ gets what they want? What happens if their Bank of Japan actually does manage to get this 1% inflation? That is very dangerous. Then aren't those bondholders going to be in the position where they say, listen, 1% is not enough, I need 3. Well, guess what? If you take yields in the Japanese government bond market on the 10-year out to 3%, you don't need much of a move upward in rates. And then suddenly you're in a position where just the debt service on their outstanding debt exceeds their tax revenue. So the Bank of Japan here, this is really bothersome in the long term if they're correct. It's more one of those positions of be careful what you wish for. Another thing to note, if the Bank of Japan announced a widespread program of buying Japanese government bonds, shouldn't the Japanese government bond market have rallied significantly last week? Guess what? It didn't. That bothers me. It is certainly possible. But all we need is for bond market yields to uptick a little bit, and then guess what? Bond yields are going to uptick a lot after that market makes its move. So we should definitely have the Japanese government bond market on our radar right now, because it certainly is possible that something big is in the cards. This is Tres Knippa for NakedTrader.com on the floor of the Merc in Chicago.